Also great to be joined now by Peter Switzer, as always on a Friday, founder of the Switzer Report. Peter, it's all about Donald Trump today. He did have a good week and things have turned a little bit sour. He's tweeted this morning that it's the greatest witch hunt in history, of course referring to this impeachment situation that's going on. How have the markets been affected by this?
Well, the Dow is down this morning and there's a number of things going on. Clearly the impeachment question mark is just another uncertainty factor. And it's uncertainty factors that make markets go up or down. And when you think about it, Peter, I think probably, even though the impeachment issue is something that spooked the market, there was a really great Trump tweet out today where he basically said, we're looking for a new site for Chile, but I love this, that they'll soon be signing a trade deal which will be probably 60% of what he wants. Now, he's putting this out there, I think, because the impeachment stuff is sort of unsettling markets, but operating against that is all the good news on trade. And I think the impeachment process is actually speeding up the Trump team's efforts to actually pull a deal off, because that's what the market's really going to care about. Because the impeachment process could go on for ages, but the trade deal gives business certainty to invest.
I reckon there's a bit of impeachment fatigue going on in the US, probably a bit like Brexit in the UK, to be honest. But back home, we saw inflation data out this week, Peter Switzer. It's pretty much in line with trend at the moment. But explain me this. How is it that childcare has gone up 12%?
Gee, that's a nasty curveball.
Sorry.
Look, because
it was a little tongue-in-cheek, I've got to say.
Yeah, but because I'm a business expert as well, as you know,
absolutely,
I can understand. This is a big demand area. Childcare is critically important for a group of young people who effectively have, in many cases, overborrowed for property that went through a boom. And as you know, Laura, young people like great new stuff. And so there's a lot of expenses falling upon these young people. Therefore, they need childcare so they can go out and work. And it's a high demand area. And that's why the fees are going up.
Yeah. What else are you not liking at the moment, Pete? Just go negative just for a little bit.
Yeah, look, I think that we got some loan data this week. Private household loans only up 0.2%. Sure, it's up, but it's still pretty weak. I didn't like the fact that the Chinese Purchasing Managing Index is under 50. Anything under 50 means it's contracting. It's only contracting at a small pace, but it's still something I prefer not to see. And I didn't like the fact that the Chinese officials came out and said, oh, maybe this trade deal won't last very long. And they're a bit upset about the impulsive nature of Donald Trump. These things didn't actually help the stock market this morning. But I've got to say, the don't likes are really small compared to what I liked this week.
Yeah, I mean, the headlines data is still a little concerning. Interest rates at record lows. They could go even lower. Inflation, as we saw this week, really hasn't moved. And that unemployment rate is still pretty stubborn as well. So where do you get such optimism from?
Okay, and it's a really great question, but I'll give you even a greater answer. If you look at you're
really managing expectations here.
Yeah. If you look at the annual data, it doesn't look good. I actually said this to the Australian Retailers Association conference only a day ago. But if you look at the most recent data, things are getting better. Even that horrible loan number at least went up. It wasn't going down. But also, the inflation number was strong enough for the market to say, hey, forget about a day rate cut. So also, export prices went up 1.3% in August, but for the year, they're up 14.7%. So we're selling stuff 14.7%. Yeah, so therefore we're benefiting from the trade impasse. Also, this is a great number. Building approvals this week went up 7.6% for the month. That's off a 6.5-year low. So see what I mean? Like we were at a 6.5-year low in building approvals, but we then got a 7.6% jump. And also, I love the fact that the Fed cut interest rates. I also think that US earnings season, 2/3 of US companies are reported, and 75% of them beat on expectations. So if you put it together, the good stuff is just slightly ahead of the bad stuff.
Well, I don't know if you've seen the story in The Australian this morning, Peter, about building sites that are being dead in the water because of professional indemnity insurance. So is that going to buck against that good news that you just said?
Look, all these things are operating at the same time. You know, you've got the pluses that I think that the house price recovery is bringing more consumers back to the housing market, but you've got all these obstacles to supply. That's a classic case. One of the biggest problems the governments around Australia, both state and federal, really have to work on is making it easier for developers to actually produce supply. Because our population growth, we are the 5th fastest growing population-wise country in the world, and our supply is being held back by silly restrictions. Now, of course, we need to improve the actual inspections of the properties that are being built, but we still have to make it easier for developers to get new developments across the line, because the supply factors are so restrictive, rents are going up, and it's really making it hard for people to actually get into properties.
Yep, certainly. Yep. That is the at least anecdotal evidence too. Peter Switzer, great to talk to you as always. Enjoy your weekend.
Yeah, and by the way, Caterpillar's up 10% since I first introduced it.
Well, it's up and down, that is. It was up 6, then it was down 6, now up 10 again, so it's volatile. But I still back you, Pete. No, don't worry.
Back you too.
I'm still with you.
That's right, Pete. The trend is your friend until it bends. Remember that.
I like it. Thank you, Pete.